We're hours away from getting the federal budget. Let's focus on what may come out in relation to the energy sector, particularly renewable power, nuclear, and carbon reduction. We're joined by Thomas Timmins, leader of the energy practice group at Gowling WLG, the law firm. Thomas, thanks very much for joining us.
Hi, Andrew. Good to see you again.
You note that a lot of measures are already in place to boost the renewable sector. To start off with that one, what changes are you expecting?
Okay, so what we're expecting primarily, we're expecting to see the final text on some of what we refer to in the industry as the ITCs, the investment tax credits, to come out. So there are a number of investment tax credits that are already in place, and they were promulgated back in June, declared into law back in June. And then we're expecting the balance of them to come out in relation to clean electricity, the clean electricity ITC, the electric vehicle ITC, and then we're also expecting refined language to help clarify some of the kind of the legal minutiae surrounding the ITCs and how they're going to function for the financial sector.
Do you think there'll be any cutbacks in support for the renewable sector? Are there any areas that are unpopular maybe with the industry or that are just not working?
I haven't seen any indication on that front, Andrew. As you know, the carbon tax was rolled back.
Yes.
And at the end of the day, the government has messaged that it's going to be making some big investments, and that this is a generational shift. And these are big investments, and of course, for most of Canada, this is ultimately where the puck is going, and the country really needs to position itself to kind of line up with the rest of the world in terms of the shift to
and we
renewables.
might get more detail on support for these small modular reactors.
Yeah, no, absolutely, and I'm expecting that we're going to see some of the detail fleshed out surrounding how the ITCs are going to work, what the prevailing wage and apprenticeship and the labor requirements are going to be, and then there's this kind of wonky available for use rule that we're looking for some clarification language. And that ultimately is to help de-risk and add certainty for financial investors and of course for project investors who are going to be relying upon these ITCs to try to assess and predict what their IRRs, their internal rate of returns, are going to be.
You warned us that this available for use thing might take us into the weeds, but broadly, what does that mean?
So it's the idea that when can you claim the ITC? At what stage in the project development, as it approaches completion, can you claim the ITC? And so what we've seen now is we've seen the creation of what are ITC bridge loans, i.e. Allowing these projects to be built and allowing the capital to flow into the projects before the actual investment tax credit is claimed. And so that's less than optimal and less than financially efficient. So looking to seek clarity on the availability for use and really trying to get the timing squared so that investors, and remember, these are investors in Canada and then also internationally coming in and putting money to work. And what's also really fascinating, Andrew, is that this is a kind of a well-proven tool for governments to use to allow the kind of the animal spirits of the marketplace, to allow market forces to make the choices and ultimately succeed and fail or fail on their own kind of on their own merits, rather than governments making choices in terms of technologies or the application of technology. So it's a good tool.
Just turning to oil and gas or conventional energy, any measures there? I mean, we've heard a lot about supporting infrastructure projects. We haven't had a lot of details, I don't think, anyway, about support for pipelines.
No, we haven't, and it's a really interesting sector. So one of the ITCs that was enacted into law back in June 20th of 2024 was the carbon capture, utilization, and storage ITC, which this didn't really go noticed in the media. People will notice that actually goes from 37.5% up to 60%, which is roughly double the other ITCs. And so that's really a message from the government saying, hey, well, we see you, and we want to support these types of technologies to reduce the carbon footprint of the oil and gas sector. And so the new rules that we're expecting to see today, clarifying some of the labor requirements and then clarifying the availability for use rules, will, I believe, help clarify the application of the carbon capture and storage ITC, which came out last year.
And sorry, Thomas, I know we're straying into politics here, but the oil sands industry has said, well, we'd like to go ahead and invest in carbon capture. We're still not clear what the level of government support will be. There's been sort of a standoff in that area. Do you think they'll get the clarity they say they want?
I don't know if they'll ever get the clarity that they want, Andrew. But at the end of the day, it's a technology that's still in the development stage. I think that's a fair assessment, and hasn't really been scaled, applied at scale anywhere. But it's one of those technologies that, there's always hope. And at the end of the day, it's something that the government of Canada is saying, yeah, we see you, and if this is a direction that the market sees as viable, we're willing to tag along. There are also, of course, provincial supports that need to fall in line as well. And so we'll see, and it'll be interesting to see. Canada's not the only place on earth where these technologies are hoped for, and so we'll see if that industry does actually get off the ground.
Thomas, thanks very much indeed. Thomas Timmins, leader of the Energy Practice Group at Gowling WLG.